Hi guys, another video of the general introductory videos of Market Newbie presented to you with the title of Stock Market Investing with Only $5,000. The reason we made this video was a lot of our students ask us about how much money they need to start with, or a few of them simply say they don't have enough money for stock market, and I always tell them that no, you can start with as low as $5,000. In fact, a few stockbrokers have only $1,000 money deposit limitation. The other question that the students ask is it even worth starting off with $5,000? I think we have answers for you in this video, so buckle up for a revelation we have for you as a Market Newbie member. One way to explain how you can make money with $5,000 is to classify risk levels and find out what your risk tolerance is. We at Market Newbie define 3 levels of risks and their corresponding 3 types of investment: low risk, low return investment, medium risk, medium return investment, and high risk and high return investment. Starting with our version of the low risk, low return, first of all, the name low risk, low return in the world of Market Newbie does not mean almost non-existent low returns that banks and mutual funds offer. Having said that, we are realistic too, and we do not offer you 1000% return that other trading academies would probably tell you. I was actually reading an ad about a trading academy that turns your $1,000 into $1 million or something like that. While promises like that is not based on lies, their promises is like, do you know that guy who won the lottery? This is not what Market Newbie offers. Market Newbie teaches low risk, low return investment and other types of investment methods, high risk and medium risk, and attaches percentages to it. So for instance, with low risk, low return, we're expecting a reasonable 10 to 20% return in a year. The good thing about this method of investment is you only need to spend 30 minutes a day studying the market on the side of your actual day job. Think of it as a passive income which helps you make extra money on the side while you're focusing on your career. So to give you an idea, with $10,000 with 10 to 20% return annually, your $5,000 will turn into $6,000 in a year. The most important factor in this form of investment, or in general any form of investment, is having patience and discipline. We wrote it twice on this slide, actually 3 times given the pictures below, to further highlight the importance of patience and discipline. Stock market punishes those who are impatient and haphazard, and it punishes them very badly, guys. So again, to give you perspective, if you continue the steady low risk, low return investment methods for 5 years, given the compounding interest method, you will make $12,441 at the end of the 5th year, which is more than 120% return of your initial capital. So just for giggles, let's compare this return with what financial institutions have to offer. In your typical savings account, banks really doesn't return anything to you. Maybe 1 or 2%, and that's maybe. And guess what? Inflation is already 2 to 2.5% in North America. So you are behind since the start. And you will be losing your money if you leave it in your bank account. Mutual funds appear to be a smarter way, but not really. I used to have investment with mutual funds and I got 3% return annually without considering the management fees they deducted at the end of the year from my capital. They advertised this mutual fund thing so much that you would think, oh my god, what a right way to give my money to somebody else to manage and make money off of it. Many people's favorite is real estate. But let's not kid ourselves. Real estate works fine in few cities in a boom time, and if and only if you have a lot of money. How can anyone invest in real estate with $5,000? The beauty of a stock market investing is you can start with any budget at any time and given any time limitation you have, and still make very reasonable money. That's it, guys. This is the end of part 1 of this lecture. Go to our social media web pages, follow our page, and make sure you watch the second video, or part 2 of this lecture, where we talk about medium risk, medium return, medium return, medium risks, and high return, high risks, type of investment, and we'll give you a few percentages as well to give you a perspective of how it works and what you can expect from your investment at the end of a time period of your choosing. Thank you very much for your watching and see you in the next video.